The Middle East as an investment horizon is seeing some substantial changes, and they're very important to us because they're changes that we've not seen within the region before. So this time round, at this point in the Middle East cycle, which is just coming out of a pretty difficult recession, we see new institutions, including sovereign wealth funds, primarily from the US and from Far East, targeting Middle Eastern income-producing stock for the first time in their history. And what that's leading to is a substantial component of new capital coming in to the Middle East. And by Middle East, I mean, in the first instance, probably Dubai or Abu Dhabi, the UAE anyway. And this for us is very exciting because it brings a level of liquidity that perhaps we haven't had on an international scale before. For this inbound capital into the Middle East, the European investors are not there yet. So the market makers at the moment appear to be American investors and people from Asia Pac, from funds, high net worths, family offices, including sovereigns. The frustration they're experiencing at the moment, though, is that there's almost no income-producing stock available within the marketplace. The concept within the Middle East mindset, if I may use that generic term, is that certainly the merchant families or the family offices buy and hold. I think the government entities are going to be slightly different, but what that causes is some frustration in that once something has been bought, it's not then released into the marketplace. So the level of liquidity in the market is actually at a relatively low level. So what we at CBRE are trying to do is create new instruments that allow that foreign allocation of capital to monetize those commercial assets and start a level of liquidity that I think will gain momentum strongly over the next few years.